More carnage in China stocks, posting their largest daily drop in over 8 years on Monday. All right, take a look at the benchmark Shanghai Composite Index, down 28% since its June 12th high, but the index was on the rise before Monday's loss after Chinese officials went to great lengths to stop the bleeding, which began in mid-June, from suspending trading in some stocks to banning large shareholders from selling shares. So what does this mean for U.S. investors? All right, let's get straight to Scott Wren, the senior global market strategist at Wells Fargo Investment Institute. And Scott, your reaction to the sell-off in China, I mean, should we expect the government to step in again?
Well, Scott, I think you are going to see the Chinese government intervene a lot, just like they intervened quite a bit in the economy. So I don't think that's going to be anything unexpected. I think it's going to continue, and I think you're still going to see a lot of volatility, at least in coming weeks, if not coming months, in the Chinese stock market.
All right, so for retail investors, I mean, is now the time to get into China? I mean, yes, stocks are a bit cheaper, and like you mentioned, the central bank could come in soon to prop things up.
I think it's a mistake really to just hold China by itself and look at it by itself. You know, what we would want our clients to do is hold China as part of a diversified emerging market type of portfolio. So I think for most people, and certainly most retail investors, just that standalone China component, if it was of any significant size in someone's portfolio, which I don't think it should be, that's a little bit too wild of a ride, I think, for most of our clients. Our clients tend to be more conservative. We want them to look further down the road. That's easy to say, but when you're in a market like China and you're seeing swings, you know, you mentioned the market was down over 8% overnight. You know, that's a little bit too much volatility for most of our clients.
Now, within the Shanghai Composite, though, all of the sectors were down over 8% on Monday, with the exception of utilities, which saw about a 7.7% drop. So if someone is going to invest in China, where in those sectors do you think are the most opportunities?
Well, once again, I think you have to take a basket approach, and if you were just focused on China, what you really need to do is buy a very diverse, whether it's an ETF or some type of fund that has exposure across all types of sectors. So if you're going to do China standalone, I think you need to leg in. In other words, I don't think you want to put all of your money in at once, but certainly on these big down days. And, you know, the prospects for China over the next 10, 20 years, I think, is good. It's just in the nearer term, we're going to see a lot of volatility. So I would be legging into this market on the way down. And when you have these big down days, I would certainly be willing to step in.
All right, now just real quick, you mentioned the fundamentals in China. Of course, we saw some weak industrial profits data that fell in June after rising in both April and May. So is there more fundamental weakness ahead in China?
I think there likely is. I think the government's target rate of 7% GDP growth this year is a little too optimistic. You know, of course, they're in a tough spot where they're trying to transition from relying on all of us to buy their exports to where there's more domestic consumption. I view that as a multi-decade kind of an evolution. So I think you're going to see the Chinese economy slow down a little bit, but I would consider it better quality growth when you can get domestic consumption up rather than relying on the developed world to buy from you. And that's really been a problem for them because, you know, clearly our estimate here for GDP in the U.S. this year is 2.8%. Eurozone, maybe you'll see 1.5%. So our economies are just not growing fast enough where China can count on exporting and relying totally on exports to the developed countries.
All right, certainly something we'll be watching. Scott, we'll leave it there. Scott Wren, the global market strategist at Wells Fargo Investment Institute. Thanks very much for joining us.
Thanks, Scott.
I'm Scott Gamm, and you're watching The Street.